Hi, and welcome to this short presentation on the alternatives to long-term care insurance. My name is Philip Pent. I'm with Paul Pent and Associates. We can be found at paulpent.com. That's paulpent.com. You can read more about us, our financial services. We have a radio show. You can listen to that. Also, if you want a free financial review or would like to contact us and ask us more about the contents of this video, you can do so through our website. You can also call us on our 1-800 number. That 1-800 number is 1-877-797-PAUL. Quickly to the point, 70% of people over age 65 will require long-term care. Long-term care costs in 2010, they're very high and they're going up. So as you see through these examples, if you want to stay in your home, it's even more expensive. Having a semi-private room has its expenses, and so on and so forth. So many people have begun shopping for long-term care insurance to protect their assets. But there are some problems with long-term care insurance. First of all, it's very expensive. It's complicated. There are increasing premium payments. Now, many people in Florida are just beginning to find this out, that the Florida State Legislature, in order to keep insurance companies solvent, can increase your long-term care insurance premiums without you knowing it. In other words, you bought it long-term, let's just say you bought long-term care insurance at an early age. You bought it because maybe your agent said, hey, the earlier you buy it, the cheaper it is, but that's not necessarily so. Sometimes those premiums are going up. Fourth problem with long-term care insurance, and probably the most annoying one, is if you don't go into a long-term care facility, you may never use it. And all that money you spent up to that point is gone. So what are the alternatives to long-term care insurance? The number one is self-insurance. Most people, in fact 75% of people, will use their savings to pay for long-term care. And there's some good reasons for this. You maintain control of the asset, there are no increased premiums, and if you don't use long-term care or go into a long-term care facility, you can pass the money on to loved ones. But there's a big problem with this. You may run out of money or use up most of your assets in a long-term care facility. There's a much better way. It's called long-term care universal life. What is the main difference between these two methods? Self-insurance and Lincoln Moneyguard Reserve Plus. Let's take a look. Say you put $100,000 in a certificate of deposit or in a cash account or whatever, but in this case a certificate of deposit, or you put $100,000 into Lincoln Moneyguard Reserve Plus. Both assets, you remain in control of your money. Both assets, there are no additional premiums. And in both cases, if you don't need long-term care, you can pass that money on to your beneficiaries. Now, here's where the Lincoln Moneyguard Reserve Plus, the alternative to long-term care insurance, really shines. If you need long-term care, that $100,000 asset can blossom by almost 5 times the amount you put in there. You're not worrying about tapping into other reserves that you have or possibly the equity in your home. You can pause this illustration anywhere you want to and take a look at these examples as I go through them. Keep that in mind. This is a great way to leverage your money. $100,000 becomes almost $500,000 worth of coverage for long-term care needs. Now let's go through some specific examples. I'm going to go through these very quickly because, again, you can pause this at any time and look at these examples, or you can go to paulpent.com to get your own personalized example. Here's Jeffrey, age 70, and Ann, age 60. What happens to their premium of $150,000? They can get it back at any time. They can pass a $181,000 income tax-free death benefit to a beneficiary, or that money will turn into $545,000 of long-term care reimbursement. Here are some more examples. Gloria, age 62. What happens to her money? Joyce, age 76. What happens to her $100,000? You can look at that. Also Dan, age 50. All these people have different reasons for buying this alternative to long-term care insurance. It's a very simple way to save for long-term care and a great way to avoid the high premiums and complicated nature of long-term care insurance. Again, for your specific quote, go to paulpent.com, that's Paulpent, and schedule a free financial review, or go to the contact page and say, hey, I would like a free quote. Here's my age, here's my health. Please send me a free packet on this Lincoln Financial Moneyguard Reserve Plus, and we'll be glad to do that. Thanks for joining us for this short video. Again, my name is Philip Pent. Look forward to hearing from you.